Good afternoon, students. Now we are going to start with the preparation of the profit and loss account. Okay. So good afternoon, Indra, Swati, Shruti. So we will start with profit and loss account. Okay. Just now, Dipanshu, Khushi, Santholia. Good afternoon, all of you children. Now let us start with profit and loss account. Okay. So what is the basic thing idea for preparing profit and loss account? After the trading account discloses you gross profit. Okay, then a businessman has to incur what, a lot of expenses. Okay, after the trading account also. So what are those expenses? Those expenses are done to, they are known as all indirect expenses. Okay, so as a result, profit and loss account is prepared for those expenses incurred. Okay, so what is the need and importance of the profit and loss account? To ascertain net profit or net loss. Okay, from the trading account we prepare gross profit or gross loss, and from the profit and loss account we prepare net profit or net loss. Okay, now comparison with previous year's profit. In order to know whether this year you have earned more profit or less profit, you have to compare it with the previous year. So that will tell you about the, through the profit and loss account. Okay, and control over your expenses. Once you see how much expenses you are incurring, okay, you can have a check on your expenses, control on your expenses when you see the total expenses in the profit and loss account. Okay, and this profit and loss account, it is helpful in preparation of balance sheet. How? Because here it discloses you the net profit which you need in the balance sheet. The net profit is added with what? Capital. Capital, with capital you add net profit, and then you subtract drawings. Okay, so in the preparation of the balance sheet, net profit plays a very important role. Okay, now let's see how we are going to prepare the profit and loss account. See how many items are written on the debit side. In the debit side you write gross loss. So what you write in the credit side? Gross profit. Okay, office and administrative expenses are written. Okay, selling and distribution expenses are written, miscellaneous expenses are written. Okay, so this is what are the things coming in. We will talk about these expenses in details when we see the format. Okay, and on the credit side we write what? Gross profit. Okay, and indirect incomes. What are those indirect incomes? See, very less incomes are there. Okay, here you have income from investment. Next, you have rent received, discount received, commission received, interest received. Okay, so very few incomes you have which you have to record in the credit side of the profit and loss account. Okay, now see, now look at the format. You have the book. So just one thing you have to remember, that in the credit side you write gross profit BD, and if you have ended the sum with gross loss, that you are going to record in the debit side. Okay, done. Now see what you are going to do. See, first thing is the office expense. Now there are numerous expenses over here. Just keep an eye on them, you will remember. Okay, it is nothing to worry, such a big list is there, so children don't worry. See, salary, wages, you know that it is coming in trading account. Okay, so salaries will come in PL account, salaries and wages will come in PL account, and last day I had mentioned wages and salaries will come in trading account. Okay, don't confuse. Only wages, trading account. Only salaries, PL account. Salaries and wages, PL account. Wages and salaries, trading account. Okay, just keep this thing in mind in this manner. The way I am teaching you, then you will remember. Okay, next it will be rent, rates and taxes, printing and stationery. So look at these expenses: postage, printing, okay, taxes, rates. These all expenses are related to office expenses. Okay, lighting, insurance premium we have to pay every year. Okay, telephone is there in the office, so telephone charges you have to pay. Legal charges are there, audit fees, traveling expenses, establishment expenses, trade expenses, and general expenses. So these all expenses are grouped under the head office expenses. Clear? Next thing is selling and distribution expense. Okay, what is there in selling and distribution expense? See, carriage outward, carriage on sales. Don't confuse. Carriage on purchase is in trading, okay? And carriage on sales is in PL account, okay? Next you have advertisement, commission. If only commission is written, it means it is commission, it is an expense. So it will be written in the debit side. And if you have commission received, that means it is an income, it will be written in the credit side, okay? Next it is brokerage. Then you have bad debts, export duty, packing charges, delivery van expenses, and stable expenses. So these all expenses will be grouped together under the head selling and distribution expenses. Okay. Next it is miscellaneous expense. What is coming under the head miscellaneous expense? Discount allowed is there. Any kind of repairing expense. Then you have depreciation. Okay. Next, you have interest. This interest is interest paid. Okay, so it is written in the debit side. Then you have bank charges. Then you have entertainment expenses, conveyance expenses, donation and charity, and loss on sale of assets, fixed assets. Okay, so these all expenses are grouped under the head miscellaneous expenses. Once you start doing the sum, you keep on practicing, you will understand where to write which expense. Okay, so these all expenses are grouped together and they are in the debit side. And in the credit side, see, very few things are there. Rent from tenant, this is rent. Credit means rent received. Okay, discount received, discount allowed is an expense and discount received is an income. Okay, then you have commission received. Just now I told you, when you have only commission, okay, when you have only commission, it means expense, it will be written in the debit side. When you have commission received, it means it is an income and it will be written in the credit side. Next you have interest on investment. The investment that you have done in the bank, every month the bank will credit you with interest, so that is your income. So interest on investment is an income. Dividend on shares, this is also an income of the shareholder. Okay, bad debts recovered, bad debts itself, it is a what? Bad debts itself, it is a expense, because when you don't get the money, it is bad debt, it is an expense. But when you recover that money, that is known as bad debts recovered, it is becoming your income. Then profit on sale of assets. Okay, income from other sources and miscellaneous income if there is any. Okay, so these all items of income will be recorded in the credit side. Now after adding the entire thing total, when you add PL account, then you subtract the expenses, then you get net profit. Okay, that is transferred to capital account. And in case your debit side is more, then you subtract the credit side all the income, then you are left with net loss. Okay, so this is the format of the PL account. It seems very big, but when you do the sum, it becomes very easy. Okay, so without wasting any time, those who are there in the class, please give me your attendance. Okay, start writing present ma'am, those who are attending the class. And we will have illustration 11. Okay, illustration 11 is very easy. So gross profit is given to you in this sum. Okay, so Indra is there, she is writing present ma'am, and two more people are there. Please say how who are attending the class. Swati Verma. Okay, so gross profit is there. Okay, and you are with all these expenses, left with all these expenses. Now see how we are going to group this. Okay, so gross profit, when you see first item you are going to write in the PL account is gross profit. So where will you write? In the credit side, by gross profit it will be written BD. Okay, so how much it is? 10,52,500. Okay, done. Next thing, you are going to write all the expenses. What expenses are there? See, trade expense, carriage on sale, office salary, postage, office rent, legal charges, audit fee, donation, sundry expenses, okay, selling expenses. So all these expenses just below gross profit, all these expenses will be written in the debit side. So let's check. See here, trade expenses is there. Okay, carriage on sales, office salary, postage, office rent, legal charges, audit fee, donation, sundry expenses and selling expenses. So all the expenses we are written from the debit side. Okay. Now have a look on the credit side. See, credit side, discount allowed is there. This is also an expense. Then you have lightning. This is also an expense. Commission received. This is an income which will be written in the credit side. Okay. Bad debts is an expense. This is discount received. In the credit side, you will write interest on loan is an expense. So it will be written in the debit side. Stable expense, export duty. Okay, these two are expense. Miscellaneous income. This is an income. So it will be written in the credit side. Unproductive expense and traveling expense, these will be written in the debit side. Okay, so how many items are credit? Commission received, discount received and miscellaneous income. These all items will be written below gross profit. Okay, so see, commission received, discount received and miscellaneous income. Okay, these three items are being written in the credit side. Rest, all these are expense. Discount allowed, lighting, bad debts, interest on loan, stable expenses, export duty, unproductive expense and traveling expense. Okay, so all these will be written in the debit side. So we are starting with discount allowed. Discount allowed is written lighting, bad debts, interest on loan, stable expenses, export duty, unproductive expense and traveling expense. Okay, finish writing all the expenses and all the incomes. Okay, when you write finish all these things, then what you are going to do the total. When you do the total, your total comes to 10,62,200. Okay, then you do the total of the debit side, all these expenses. When you add all these expenses, then what you are going to do, subtract. When you subtract these expenses, then you are getting a net profit. How much it is? 7,50,800. Okay, so it is done. So you will write to net profit transferred to capital account. Okay, so here is the calculation of the net profit. Main thing is, after doing several practice, you will come to know all the indirect expenses are written in the profit and loss account and all the indirect incomes are written in the credit side of the profit and loss account. Okay, so all those people who are attending the class, just tell me that whether you understood this particular sum or not. Okay, if you have understood the sum, if you have understood the sum, well and fine. Okay, next thing that we are going to proceed is, I will teach you today, after profit and loss account, we are going to understand what is operating profit and net profit. What is the difference? You know, profit is generally divided into two parts. One is operating profit, another one is net profit. Okay, now what is operating profit? Operating profit is the profit which is earned through normal operating activities of the business. Okay, it is arrived, how you get operating profit? It is arrived by deducting operating expenses from gross profit. Now you have to know what is operating expense, then only you can deduct those particular expenses from gross profit. Now see, what are they telling you? Expenses which are related to the main and normal activities of the business are known as operating expense. So all the direct expenses of the business are known as operating expense. Now they include what? See, office, administrative, selling and distribution expense. Then you have discount, bad debt. So you can understand the entire chart that we saw. The office expense, the selling and distribution expense, okay, and in miscellaneous expense you got two. What you got? Discount allowed, okay, you got discount and bad debts. These two particular things has been picked from miscellaneous expense. So operating profit, another name is known as earning before interest and tax, or you say EBIT. Okay. So you have understood all the expenses which you saw in the office, all the expenses relating to administrative and selling, and two expenses are picked up from miscellaneous, that is discount allowed, okay, and bad debts. Okay. So these two, if you add, these all are known as operating expense. Okay, clear? Now then what is net profit? Okay, we are dividing the PL account into two parts. Okay, before calculating net profit, we are dividing this PL account into two parts. One is first calculation of the operating profit, and next calculation is net profit. Now how do we get a net profit? We are getting net profit by deducting operating as well as non-operating expense. So children, the entire matter is clear that the PL account, the total expense of the PL account is divided into two parts. One is the operating expense, another one is the non-operating expense. So after deducting the operating as well as non-operating expense, we arrive at net profit. Okay. So what is non-operating expense? Operating expense you have already come to know. Okay. Now what is non-operating expense? Expenses which are incidental or indirect. So direct expenses related to business is operating, and indirect expenses related to business is non-operating. Now what are they? Say they include interest on loan, okay, charities and donation, loss on sale of fixed asset, extraordinary losses due to theft or by fire. So you are understanding these expenses we are gathering somehow from this miscellaneous expense only. Okay, you have loss on sale of asset, you have donation and charity. Okay, so these few expenses are coming, they are being grouped together from the miscellaneous expense only. Okay, so now let us come. So operating profit you have understood, and operating expense also you have understood. Okay, so let us come to one sum, then we will understand it better. So here they have told you that you have to calculate gross profit, then operating profit, and then net profit. So three parts they have divided. Okay, so how do you get the gross profit? So gross profit already you have come to know that with opening stock you will write start, then with purchase you will subtract purchase return, from sales you will deduct sales return, then you are going to write wages, isn't it? Wages will be there, and then you get the gross profit. Okay, so trading account for and profit and loss account for the year ended together you are going to write the heading. So you write opening stock, okay, with purchase you deduct purchase return, okay, and wages. This side you are going to write sales, from sales you subtract sales return, okay, and you will write closing stock. Closing stock you have written, so you add the credit side, from the credit side you subtract the debit side, so gross profit you have got 5,40,000. Very good. Now let us come for operating profit. For operating profit we have told we are going to include all the what? Office and administrative expense, selling and distribution expense. So office and administrative expense, what is coming? Advertising is coming. Okay. See the gross profit which you have got by to gross profit CD, you are going to write in the credit side by gross profit BD. Okay, written gross profit. Next you will write the expense. First expense is advertising. Okay, next expense is salaries. Okay, rent and taxes, lighting, commission paid, traveling expense. Okay, office expense, printing and stationery, carriage outward. So these all expenses have come under the operating expense, and only one item was there, commission received, operating income. Okay, so do the credit side total, how much it is? 5,46,000. From there you subtract all the operating expenses, then you get the operating profit. How much it is? 2,63,300. Done. Now this profit, operating profit, you will write in the credit side by operating profit BD. Okay, when you have written here, now you are going to write the non-operating expense. So what is coming under the head of non-operating expense? Interest on long-term loans, okay, loss on sale of machinery, and loss by theft. These three items are coming under non-operating expense. Okay, then what is coming under non-operating income? You have dividend on investments and gain on sale of building. Okay, these two items are coming under the head of non-operating income. Remember very nicely. Okay, this will be very important for one formula. So non-operating expense we have written, and non-operating income also we have written. So from operating, with operating profit you are adding the non-operating income, so that comes to 3,16,100. Okay, from there you will subtract these three expenses. These are non-operating expenses. When you subtract these three expenses, then you get net profit. Okay, how much is the net profit? 2,34,000. So I hope I am clear with operating profit, gross profit, as well as net profit. Those who are watching the class, I hope you have understood the concept of what? Gross profit, operating profit, and net profit. Clear? So we are ending our class over here, children. Thank you for watching.